Stars. Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Wednesday, 26th day of August, 2015, and this is the daily report for gold and silver. Following a strong U.S. dollar, a dramatic recovery in the equities markets, we do have the precious metals, except for platinum, pretty much falling out of bed. Platinum trading about $7 higher on the day. That's the only market that was actually up. You can see that at 983. Now, dollar strength had a lot to do with today's move. When we take a look at gold, currently down about $15.50 at 1122, the low 1690, the high 46. A lot of that has to do with dollar strength. Dollar strength contributing to a negative 14 bent on the market. Now, there was selling that came into the market. That was an additional $3. And that's where we're getting our $17 drawdown on the price of gold today. Silver today also getting hit pretty hard. When we take a look at the current price, off about 52 cents on the day, you can see that it's had a low of $13.98. That's kind of scary. We are really in some unheard of territory lately. We had a high today of $14.75. So as I said, we're down over 50 cents on the day, with 38 cents of that due to normal trading, which is much, much different than gold when you consider 18 cents of silver's drawdown is due to a dollar strength. You've got a predominant amount, or 56% of the move really in selling in the market, which is a lot more, of course, than what we are seeing in gold today. As I said, gold off about $15 on the day. So what sense can we really make of this day? And most importantly, this week, of course, we have seen this week really have a characteristic of lower pricing after hitting a high at around 1171. When we look at the weekly chart, we talked about the fact that we had this variation of a three-river morning star, double stars here, and then we actually got a confirming candle. This, of course, is long-term, but that confirming candle hasn't really guided us eloquently in that we have almost given back the totality of gains seen on the prior week. You can see that right here on this weekly chart. So in terms of specific support and resistance levels, we've really got to look at some short-term studies. We can either use a daily chart or a half-day chart. In this case, I am using a half-a-day chart. On this half-day chart, though, we've got two different fib levels. Now, the first level that we have is a longer term, and both of these are relatively short-term fib levels, but this one going from about 1230 down to the low at 1071. And so we're charting the different levels: 61% at 1180, 50% at 1151, 38% at 1132, and then we do have one at 1109. The next one that we've put in is, now that we've got this defined top here, roughly at 1170, which happens to be the 61% retracement level, oddly enough, we now can plot yet another one, which is just this rally up, so that we can really plot to see where we think this particular current fall should conclude. And when we do that, as you know, one of the things I look at is Fibonacci harmonics. And the way I define harmonics is I'm looking at different time cycles and looking for a correlation or a match between these cycles in terms of the numbers. So for example, the 61% retracement level of this short-term fib retracement really corresponds to the 23% retracement level, and that's where you get a match or a harmonics, and that will lend support to this particular area on a technical basis. So we do get a good harmonics right here, and so I'm going to peg very, very strong support at 1109. That's a 61% retracement. If we get that low, that would be a point to consider taking us for the long side, because I think that that will have washed out a lot of the short plays, and we should see a bounce up from there. The next level, 50% retracement, it's not a harmonic, so it's not nearly as strong, is at 1121. You can see that that is just below the close of the market today. Market did dip below in that territory, but managed to close above it. And then, of course, we have this 38% at 1132, and I think that that is an important level to watch also, although it is not a harmonics. The closest harmonics we get is 1151 on this 50% and 1147. That comes in here, and so that's the other harmonic that we're getting. And there's no doubt we should see this market find some support. And as I said, I would look for it around 1109 based upon our studies. So traders, if you recall from yesterday's show, I talked about the fact that I thought we would see probably about a $30 drop in the price of gold. For a longer term trend, it's not really the most beneficial trade, but I do hope some of you took advantage of that and did implement short positions. For those that did, as I said, look at the 1110, 11.9 area as a good exit point. Now, strength of trend, there's a couple of ways we're going to want to look at this. The first way, of course, is going to be our Japanese average chart, but I want to look at it through two different time cycles, not only the daily, but the half day. On the daily, we're really only seeing today's move, and today's move is showing just a lot of momentum in terms of the marketplace itself. It's a large candle. It has no upper wick. And traders, when I convert this chart to a half a day chart, it does give us a little bit more information because we have more data points. And in this, you can see that not only do we have the trend gaining strength, because take a look at the size of the candles as we go from candle to candle. This last candle has the largest extension, meaning it closed the furthest away from the midpoint of the prior candle of any of these other candles, meaning the last two trading days. So we've got some steam, I believe, in terms of the trend itself left in this little downturn. And as I said, I would look for that trend to kind of weaken as we get closer to about 1109. Now, another way to look at strength of trend is the development of the moving average convergence divergence, or MACD. Now realize that anytime we bring in moving averages, we are looking at what I tend to call a trailing indicator. In other words, it's reacting to what has happened. Obviously, technical studies typically do, except for the few, and those are the few that I typically find to give us the greatest insight, such as candlesticks, such as Elliott wave, and such as Fibonacci, because we're looking ahead to project or forecast. But on a moving average, we're looking behind. So what we're really seeing when we look at the MACD is the fact that we're looking at this nice ascent or rise, and we can see that that's really pretty much run out of steam. So we are at the beginning of this downturn here, and we're also getting a sell signal or a crossing of the MACD today, and that, of course, is based upon the slow and the fast really crossing, or the fast moving down now below the slower of these two lines. So traders, lastly, I do want to take a look at silver, because silver is absolutely fallen out of bed. If you recall from the announcement of prices at the beginning of the show, the one thing that really stands out is, although the strong dollar really put a nick into all of the precious metals across the board, it was silver that saw the greatest amount of pure selling in the market, and then coupled with a strong dollar, that's where we really got the weakness on this market. And the fact that it actually dipped below $14, or right to that point according to this chart, as I said, puts us into new territory. As you can see, even on my different fib levels, this was the bottom number that I was looking for, roughly at around 1441, 1450. So where could this market go? And here's the interesting thing: to actually look for that price point, we've got to really start going back, historically speaking, to some points that come in at around 2010, 2009, 2010, before we're actually going to find this particular price point. And so that's what I meant by new territory. Let me try to extend this line over so you can see what I mean, and I'll do it as straight as I can. It seems to match the lows that we got back in the beginning of 2010. Now, that was right before the historic price hike where we tried to get to $50 for the second time in history. Silver, of course, in the 70s was the first time when the Hunt brothers really tried to capture that market. But you can see, unlike gold, where we touched those lows roughly in the 1050 area, and then bounce back up, now well over 11, you can see the kind of pressure we're looking at silver. Utter devastation in the market, because we are at lows that, quite honestly, we've not seen in about 5 years. So that's really got to be something that we've got to go to the drawing board, look at some studies, really go back in time and look at some historical data to give you a clear picture of where I think it could go. This has really been a move in silver that many traders didn't expect. It wasn't something that I was looking for. I thought we'd probably find support at around 14. Now, as of yet, we have, but the fact that we touched into 13 territory, although it was 1398, is really something that we want to keep our eye on over the next couple of days. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily update and review. Bye-bye.